Hello and welcome to the Crypto Jungle. My name is Baloo the Bear, and here on the channel I try to keep crypto simple. We look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button. I stream every Monday and Friday with a sometimes a recorded video on Wednesdays. In today's video, we'll keep it short, we'll keep it simple. I want to go over Bitcoin, Ethereum, Matic, Olympus, and Chainlink. Not going to do much on the request side today. Just got a lot of catching up to do, so we'll keep it short, sweet, to the point, but I've got some good content for you nonetheless. So without any further ado, let's jump into the king of all crypto, and that is Bitcoin. Just got our daily candle close here with Bitcoin just moments ago. We have closed below the 200 period moving average. That is okay. We can close candles below the 200 as long as we can overcome that. That 200 is kind of, for a lot of traders, the line in the sand between a bull market and a bear market. So we're getting really close to that invalidation point. We're getting close to that inflection point where we will potentially need to flip our bias to the bear side, but that has not occurred just yet. So we're still bullish until proven otherwise. This yellow box right here represents a pretty clear line in the sand for me with Bitcoin's price action here. This has offered a lot of support and resistance over the last year. It was resistance, support. It went through the support pretty easily here, but it did stall. Then we had a resistance, support. So this line holds a lot of confluence throughout this consolidation overall, and it's a very important level that we need to be laser focused on, because that's pretty much the level. As long as we are above that line, we can consider ourselves still bullish. We can dip below it, but we cannot close below it. So that is what I'm looking for. Unfortunately, we are losing the 200. This will vary from chart to chart. The 200 period moving average, this will vary from chart to chart. So we'll see. But yeah, it's not great to see it below that level. If you go down to the smaller time frames, let's get rid of that. Go down to the smaller time frames. On the 4 hour, we can see a little bit of a range developing here. So this could end up being a spring. We can dip below it and get bought back into the range here, get some sort of action like that before I move to the upside. But I'm talking a lot of bullishness in a local downtrend. On the weekly, the level to watch out for is a close below 43.2. So we don't want to see a close below 43.2. We have 2 days left in the weekly candle close, so laser focused on that. But I want to show you this chart right here, which is just the consolidation that we've been in for about a year with the labels. So I've gone ahead and labeled this. I've been getting pretty lazy over the last few months in terms of labeling my charts and trying to truly express what it is that I see when I look at a chart in terms of the Wyckoff method. So we'll kind of go over what I believe this macro structure to be, which is a reaccumulation after decline. So the main characteristic of a reaccumulation after decline is this distributional zone right here at the beginning. In phase A, you have basically a distribution that results in a shakeout. We had the May crash, very large shakeout, and then that goes into an accumulation on this large structure here that the entire accumulation range since the preliminary supply is 344 days long. So really long-term accumulation. We've been trading sideways for a very long time. This is good. When we have a reaccumulation, it kind of builds the cause, the cause and the effect, the first law of Wyckoff, or second law of Wyckoff, to have a markup event. So I know it's been rough. The alts continue to bleed. When we take a look at Bitcoin charts like BTC.D, Bitcoin dominance, we can see that the alts have been bleeding. A little bit of recovery, I guess, lately, but it's not been a pleasant environment if you are a heavily invested altcoin investor. So my sympathy goes out to you. But I do think that big picture, there's still nothing to worry about. We have not lost those key support levels. We have not lost any of that market structure. We're still in an uptrend, even though it doesn't feel like it. Let's take a look at Ethereum here. Ethereum, really beautiful. I like this structure of Ethereum. What's going on, Just Tree Hugger? Nice to see you in the stream. I really like the structure of Ethereum. It's doing better than Bitcoin from a structural point of view. It's holding higher levels. It's holding higher highs in relation to its previous structure. You know, it's well above kind of this area here when compared to Bitcoin. You know, we're much lower, and our reactions to the downside are much stronger. So Ethereum has a lot more propping it up. Now, there's a lot of, you know, criticism against Ethereum because of the high gas fees, and you know, that's rightfully so. It's struggling to scale. So there's a lot of expensive transactions out there, but Ethereum does have a lot of really innovative projects that are coming out of the Ethereum network, and it's got a huge developer base. So I think that Ethereum is undervalued. I think it's underpriced, and I would like to see a breakout here. So the area on Ethereum that I would be looking for is basically, I've got a line here at 4,400. We'll call it 45. So a break, start closing those candles above $4,500 on Ethereum. And I really don't think that there's much resistance above us beyond that point. Take a look at Avalanche. Absolutely. Avalanche is really kind of, that's the only request I'll do. And it's only because it's you, Kahuna. You're a longtime watcher of the show, as well as a fellow jungle dweller. So we will take a look at Avalanche, because Avalanche has really kind of come a long way. There's a lot of dApps being built or being moved over to Avalanche. There's a lot of liquidity migrating over to Avalanche, and it's a really good sidechain. If you haven't used it yet, it's a very liquid sidechain. It's a good one. Speaking of sidechains, let's take a look at Matic. Another structure that's been in a very long-term sideways consolidating pattern. Another accumulative structure by my analysis. This looks like an accumulation to me. So I would be looking for this to break out the local high for kind of that signal to the market that we're ready for markup. So, you know, anything above 245, we'll call it 250. You know, you get a break above 250, get some candle body closes above 250, and I think that would be a pretty strong signal to the market that we are ready for a markup event inside of Matic. So on the note of sidechains, may as well take a look at Avalanche right now. We'll do the Coinbase chart, not the Coinbase, the Binance chart. Beautiful recovery, fantastic recovery. And that's because there are a ton of dApps being built on Avalanche. There's a lot of high quality protocols that are migrating over to Avalanche. We have the new liquidity incentive program with Olympus that's integrating with Avalanche. I know all things Olympus, so I know what's going on in that realm. There's a demand for the AVAX token. So it's nice to see this recovery here. I don't think that we are actually going to get a breakout here. We need to start closing candles above this level before I can get too bullish on Avalanche. So you can see that we stopped just short of that level at $120. The likely scenario is that we go into some sort of sideways accumulation, which, to be perfectly honest, is the exact kind of range that I would like to see with Avalanche, because I don't feel that my Avalanche position is strong enough. So I actually want to see us consolidate in this range between 120 and 75 bucks. 75 bucks. If you can get Avalanche anywhere at 80, 70, you know, if we get a scary wick down to 60, I think that would be a fantastic buy. At this level that we're currently at right now, we are at a resistance. So until we can overtake that resistance, it comes at high risk for any new entries at this level. Let's take a look at Olympus. Olympus, I cannot believe how low we are. Now, this would be scary to a lot of people that don't understand the mechanics of a protocol like Olympus, where the compounding returns can take care of a lot of losses long term. This is fantastic. I bought some Olympus yesterday. I'm gonna have to, dig deeper in the couch cushions to scrounge up some new cash to inject into the Olympus protocol. There is a ton of innovation coming out of this team. It's one of the biggest projects, I think, in crypto. In my opinion, if you ask me what I think the best project in crypto is, I think that it's Olympus. That's just my opinion. Just some dude on the internet who's just obsessed with what Olympus is doing. So I will be stacking up my stack at these levels. I think it's a beautiful time. TA, we're on a swing low. There are so many variables that go into the price action of these high APY rebasing DAOs that traditional technical analysis is really not going to offer you a ton of confidence one way or another. All I know is that we're on a swing low, and I'm anticipating another day, you know, whenever that day may come where there's a swing high. This is kind of more for the hands-off investor, the long-term investor, somebody that just wants to be the recipient of those compounding yields. This can be a great protocol for you. But for the high-frequency trader, where do I buy, where do I sell? Olympus is not, you know, probably not for you. Let's take a look at Chainlink. Yeah, I gotta change that. You sent me a message about that command there, Gravy. I don't know what's going on with that. Anyways, getting distracted by my stream here. Taking a look at Chainlink. Chainlink, it was looking bullish in a localized downtrend. It's highly likely that we probably come down to the bottom of the range here. Whether we bounce there and kind of get that momentum, we really need to start breaking some of the structure. So we did get a little bit of a tease up here when we were up around the $36 mark. We didn't close any candle body closes. We did not get a single candle body close that was higher than this close right here. So because of that, we didn't really change the structure. We're still in a downtrend on Chainlink, or at least in a sideways holding pattern, trading sideways, accumulating. It's still in accumulation. The demand for a project like Chainlink is kind of up for debate. Whether, you know, that the price of Chainlink is justified at these levels. If you invest in Chainlink, you are investing in blockchain development. It's not a bad bet to be taking, but the current price action is not giving you a ton. We've been in a holding pattern for a while now, but we'll see. We'll see. Oh, somebody trying to post links. Sorry, no links, my friend. So yeah, we're going to keep it short and sweet here today, everybody. I want to thank you for joining in. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. If there are any projects that you want me to take a look at, leave them in the comment section down below. And until next time, please trade safe. It is a jungle out there. Peace.